So I had a video all ready to go, and then the stars aligned just right, kind of, and I changed it. Ladies and gentlemen, the trailing stop video. So the situation here is not ideal, but I feel like if I don't do it now, we're never going to get the chance to do this video. We have metals coming up very soon. We have a few different types of videos coming up after that. Then the channel's pretty much done. So we kind of lucked out. Kind of. But first, please just make no mistake, this video did not come up because people were asking for it. We've had an unusual amount of people asking for this video in like the past 2 weeks. That had nothing to do with it, nor does it ever. So just so we're clear there, and I've said it before, you don't even really need this video that badly. You can come up with a structure for this on your own, and simply having a structure to where most people don't have one is going to serve you really well. But I will show you how I currently do it. But for the last 3 months, never fails, there's always some new random person in the comments section that says something like, still waiting for the trailing stop video. And I'm like, well, you're going to be fucking waiting a while because the circumstances have to line up the right way for me to do this, or else I am not going to do it. So what are those circumstances? Let's talk about that. Now, I want to show you how to do this on Oanda like I've been trying my best to do on this money management playlist. So it has to happen kind of in real time. And for that to happen, I have to be in a trailing stop situation. And as you guys know, the market's been pretty dead for a while. You know, I do get them, but I don't get them on a Tuesday when I shoot videos. And it just so happened, this is Wednesday that I'm making this video right now. On Tuesday, I had a different video all ready to go. I just had to talk over it. And a friend of mine called that I haven't seen in a while, want to go out for drinks. And so I did that instead and said to myself, okay, I'll just go ahead and shoot it on Wednesday instead. Oh, and it can't be in metals. Now, I have had situations where I've had trailing stops I need to put on my metals trades on a Tuesday. But for those of you who trade metals, you know the ATRs on these things are really, really high. And I would run the risk of confusing some of the newer traders, especially if I did it this way. So I didn't want to do it there. So it just so happened on Wednesday, I did something I almost never do. And I looked at my charts in the morning. And even when I did that, I still didn't have a situation on any of my Forex charts where I needed to put on a trailing stop. But I did have a situation to where a trailing stop was needed in oil. All right, stay with me here. I told you guys back in the spring, I think, I've said it on a couple podcast episodes, that I was going to start forward testing something I thought I had really good on West Texas oil and just trade that on a separate account just to see what it looked like. And if you remember the drawdown episode, I remember I just got my brains beat in with this thing, but I came back and now it's doing pretty well. But you guys know if you trade oil that the ATR of these things run a lot like yen pairs do. So I felt like, it's kind of now or never. So let's do it here and let's hope it makes sense to all of you. So it's far from perfect, and as you're going to see later, it's even less than that. But just so you know what we are going to do in this video. So overall in this video, we're going to give my prerequisites for entering a trailing stop. Certain things have to be true before you're able to put one on. So we'll talk about that. And then we will enter in the numbers that you will need to know once you actually put a trailing stop on your trade. And then once it's on there, when do you move it? How far do you move it? This is probably the biggest takeaway of this entire video in my mind, this point right here, because this is something that I don't think a lot of people do correctly. So for anybody who has not seen the money management playlist, you need to go do that. because this video is not going to make a whole lot of sense to you. You're going to be confused. You're going to ask a question in the YouTube comments that was already covered in one of the videos in the money management playlist. Now, in particular, the videos you really need to see are the ATR video, the scaling out video, and the exit indicators video. If you have not done this, pause this video and go back and watch them. You owe it to yourself to do this first. Trailing stops, in my opinion, are very difficult to explain. So on top of all that, if you don't have the prerequisite knowledge going into this video, it's going to be even more confusing. So assuming you've done that, I want you to remember a couple things with this trailing stop. In general, trailing stops are not really something you actually want price to hit. You want these things to be fairly deep because you want to take part in those nice big runs. And price moves in waves. You're going to have retracements. You need to allow your winning trade to have those retracements. Things like retracements and consolidation periods are how trends gain more strength so they can move further later. So if you have your trailing stop too tight, as soon as price retraces, which they almost always do, you are going to get taken out and not get to participate in that really nice trend that you wanted in the first place. So you got to be really careful here. At the end of the day, a trailing stop loss should pretty much just be like a regular stop loss. Think of it as something that's only there in case price just goes crazy the other way. All right? You don't want to completely undo all the work you already did on this trade. But at the same time, you're really hoping this trailing stop does not get hit. Just like you hope your stop loss doesn't get hit. And they're pretty much going to be the same distance away from your trade. We'll talk about that. And I mean, at the end of the day, if you're fortunate enough, and if you're doing it right, you really want your exit indicator to get you out of a trade 9 out of 10 times. And so again, trailing stops need to be there, but they need to be far enough away from where price is so the trade can do what it does and your exit indicator can do what it does. So when you see me do this, a lot of you might think that my trailing stop is going to be too far away. It is not. And it's for these reasons right here. So I hope this makes sense. If it doesn't, there's really not a lot I can do about it. So do your best here, guys. For those of you taking notes, this is the part of the video where you really want to write this down. So when I place a trailing stop, here is how I do it. The rules before I even get to put one on. Price has to have closed 2 times the ATR from where I entered. All right? So if the ATR is 100 pips, then you guys know how we do it in the scaling out video. Once I got 100 pips up, I took half off. And if that trade goes all the way to the 200 pip mark and closes there or beyond there, then I can officially be in trailing stop territory. Anything short of that, trailing stops don't go on yet. I don't have a super great reason for why this is, but these are just the rules I follow. And so when I do put one on, where does it go? Same place my stop loss went when I first entered the trade. It goes 1.5 times the ATR behind where price currently is. So I do that little equation, and that will tell me where exactly to put that trailing stop. Now we're going to go ahead and do this in real time. So if this doesn't make total sense to you right off the bat, hopefully it will once we do it live. Then there are certain rules for when you move it after that. And we'll definitely talk about it. But like I said before, I think this really is kind of the key takeaway. This stuff here, you can kind of plug in your own numbers if they make more sense to you. I'm just showing you mine, and you can kind of take it and run with it if you want. But let me go ahead and show you the situation I'm talking about, and also tell you why it's not a perfect situation at all. We're almost going to have to play a little bit of make-believe here. But if you can visualize this, then hopefully it'll make sense when I do it. Okay, So let me tell you what's going on here. We are on the West Texas Oil daily chart. And it is, let's see, Pacific Standard Time, 8:25 p.m. So I am not at the point where I'm normally making trades and making decisions and maintaining the active trades that I have going. So we're going to do this off hours. But I made the mistake of looking at this thing off hours, and it bit me. So let's talk about what we have here. Now, you see the ATR. So this is very similar to a yen pair. So what you see right here, this 1.75, is 175 pips. Okay? That's how you would read something like that. You kind of ignore this number right here, and you just deal with this. So the big question before we talk about this nonsense here is which ATR number do you use? Just to keep it simple, it's not the most accurate thing in the world, but I use whatever the ATR was when I entered the trade and just use that number throughout. All right, it's not perfect, but I like the consistency of doing it that way. So I entered the trade on this candle here, and this is kind of an arbitrary place where I entered. It's not exact. So I want to know, let's see, right here, what was the ATR at the close of that candle? 186, so we'll just say 187. All right. Now, if you remember the rule, 187 times 2 is what? 374. Is that right? Yeah. Okay. So I need price to have gone 374 pips or further before I am allowed to put a trailing stop on. Okay? Now, when I was looking at it this morning, price was all the way down where this yellow line is. I'm like, oh, wow. This could really be the opportunity that I've been waiting for to show people on my YouTube channel. So let's just go ahead and say we're going to do this video no matter what happens. And my luck, throughout the day, price retraced decently, and now I don't think we're in a situation where price has gone more than 374 pips. So let's just kind of crudely eyeball it here. Why can I never get on the line? Get on there. So here we would have been okay, almost 400 pips, but we ended up right about 338. So what we're just going to have to do is almost kind of pretend like we're down here. It's not really going to affect anything. But let's just pretend like price is here and I have clearance to put on my trailing stop because I'm going to go ahead and put a trailing stop on this trade right now and show you exactly how I do it. Cool? So again, just so I'm completely clear, because I know we have people whose English is not their first language, I want to reiterate this. We currently, where price is right now, do not have clearance to put on a trailing stop. So we're going to have to kind of pretend that price is where it was at about 9 o'clock this morning. So for the sake of argument, let's just say it is ahead 400 pips. Easy enough, right? So now we are going to go to my Oanda FX trade and actually put this stop loss on. All right, so it's been a while. If you guys remember this is a demo account from Oanda, and this is where you actually enter and maintain your trades. So let's do a quick review of this. So this is an account I made just for West Texas Oil, nothing else. And so over here you have your overall account. That's before that includes this trade I have open right now, I'm pretty sure. And I always start with a $50,000 account, so we are doing pretty well. That number was very, very ugly back in March and April. But things are going good, and let me tell you what this is. This is the stop loss after I moved it to break even. So that's going to be the same as this number here. this is where I went short. Okay? So this is the current price now, and this is how much the trade is making. Now remember, on Oanda, I make two separate trades because on this platform you kind of have to. So the other half of this trade is already closed out. When this thing went 187 pips in the positive, it automatically took half of my position off. So this is the remaining half, and I'm going to put a trailing stop on this remaining half. All right, so my stop loss is no longer going to be at break even. It's going to be a little lower. So let's show you how to figure this number out. Let's see how low we're going to put this thing. Now remember though, we have to pretend like this number is something different than what it actually is. Because if you look, it's only 308 pips up. That falls short. So we have to pretend like this is 400 pips past where we got it. So it's pretty easy. That'll just be 51.65. Okay? So remember that number. I'm actually going to write it down because that's what I always do, and it's good practice to do this. So there are a couple different ways to figure this number out. This is my favorite way. You pull up your calculator, and what you do is take the ATR, which was 187. And I want to know what is 1.5 times the ATR in this situation. 280.5. So we'll just do 280 pips, and I need to make sure now and pretty much throughout the lifespan of the rest of this trade that my trailing stop sits 280 pips away from price. I'm going to go ahead and write this number down too, because this is the number I need to remember. So all I really do, let's go ahead and clear out of here. Take that price we talked about earlier, and we don't need the decimal, just 51.65, right? That's what we decided on? Yeah. And then since it's short, we want to add that number to it because it's going to go up here somewhere. So we just add 280. And now we know where our trailing stop needs to be put, at $54.45. So you can even write that number down if you want. Now on Oanda, from here it's pretty easy. So I'm going to kind of close out of there, and I'm going to go to modify. And then my stop loss now just becomes that number. They do have a trailing stop option on here, but most platforms do not. And all of the platforms I actually trade on for real don't. And even if they did, I don't think I would use it because I kind of relinquish control over my stop loss that way. So I don't mind doing it manually. I only check in once a day. It gives me plenty of time to do all the things I need to do. So I am going to put that 54.45 right there. Hit submit, and when I do, you're going to notice this red line come down a bit. And there it is. There is my trailing stop loss. It's no longer at break even. It is now a nice, comfortable 1.5 times ATR away from where we are pretending our trade was. Got it? I know this is not an ideal situation because we have to play make-believe, but this is the first chance that's really come up to where I can actually do this. So I hope it makes sense. Now, like I said before, you want this trailing stop to be 280 pips away from price at all times. Now, there's nothing you can do when price is moving up and down throughout the day. But let me tell you how to move this when it is time to move this. So chances are, you will not be adjusting your trailing stop every day. Let's hope you do that. That means your trade's doing really well. But that's probably not going to happen. So the way this works is you pretty much don't touch it unless price has closed for even more pips than when you first put the trailing stop loss on. All right. Now, price might have moved more in your favor since you put your trailing stop on, but unless it closed there too, you're not moving your trailing stop. So to put it in perspective, until price ends up closing beyond this line here, you're not doing anything with your trailing stop. Where do we end up putting that thing? Right about there. So it stays there until price moves past here and closes past here. And then once it does, you just move this, in this case, to 280 pips behind where it closed. This trailing stop, because it's a short trade, will never go higher. It will only go lower. And it will only do that once price has formed a new low in this trade. So let's say if it ends up down here, then we'll kind of move this about 280 pips away down here. And then we won't touch it unless price comes even further down and closes beyond this line. All right? That's the only time you move it. And you only move it down when that situation occurs. Got it? So for your notes, you don't really touch it unless on a short trade, price closes and makes a new low, or on a long trade, price closes and makes a new high, and then you move it in that direction. And always keep it, when you do, at 1.5 times the ATR behind where price is. If you just do this, you will always have that safe trailing stop on your winning trade, but you will still give that trade enough room to breathe so it can go even further in the direction you want. And because the ATR is percentage based, no matter which currency pair you're trading, I mean, this works on metals too. This works on everything. No matter what you're trading, the ATR will adjust. And this 1.5 times ATR will always give you that nice, comfortable cushion, but still give you that safety net just in case price reverses very sharply. Because that is inevitable. And we've all seen it happen, and it's all happened to us. So in conclusion, I hope you liked the video. It's, like I said, far from perfect, but I didn't know if I was going to get the chance to do it. So I scrapped the video that I had made and made you this one. So I hope it worked out, and I hope I gave you something that you can go use, and it works out really great for you. But the most important rule, I think, is when to move it. I don't think enough people utilize that strategy, and I think it's important that you do. No matter what your numbers are, you can plug in different numbers. I just showed you mine, but the rule on when to move it, I think, is the most important here. And then normal videos, actually, I got one in the can now. I can go ahead and put that one out next week. And yeah, we are back on schedule, but I had to shoehorn this sucker in. And even though it was far from a perfect example, I'm glad we made it happen. So traders, if you haven't yet, subscribe, hit the bell. We do videos like this a lot because we are one of the few channels online that understand that money management is the most important thing in trading, period. Nobody spends as much time on money management as we do. And now we have what I think is probably going to be the final piece to the most important playlist on my entire channel. So go binge on that playlist. Get your risk profile set in stone. And if you can just do that, traders, the rest is sure to follow. So go get it.